Happy Thursday. We are running. We've got the S&P up 2%. We've got the triple Qs, the NASDAQ up 2.5%. Let me go ahead and add my trusty Benzinga Pro onto the screen, and we're going to look at some of these highs that we're retesting. Alrighty, there we go. Okay, pulling up SPY, gonna give you guys some zooms. Also, we have a nice new camera, so that way you guys can see some more action. You can see the limited Benzinga team in the background, but check out this 1-year chart on SPY. I mean, we are running right up into some highs. So, I mean, markets are green. I'm still hanging out 80% long. I did expect us to get some sell off into the election. My thought was, regardless of who won, we were going to get some of that continued downward momentum we saw last week. Instead, the market is rip roaring higher. I'm hanging out 80% long, so if we do correct, I've got some cash to deploy, but still participating in some of this market upside. But I mean, what a hell of a Wednesday, Thursday we've had, guys. I mean, we had 3% yesterday on the Nasdaq. We got 2.5% today. I mean, things are absolutely just cooking. And while we wait for people to get in here, I'm going to go ahead and pull up our election betting odds that we've been looking at all week. And the thing that's interesting about them is they're staying even. Um, as more time has elapsed, the betting markets haven't changed their likelihood for a Trump or a Biden win. Biden's still sitting there at 86%. Trump at 19%. Again, I know that sums to more than 100. It's not a perfect market, but it's the best that we have. But I mean, Trump sitting at 19% of the betting market still gives me some possibility that he could pull this thing off. So we'll see. We're still watching votes, still watching markets tick higher. First question I'm going to throw out to the chat of the day. Let's get right into it. Give us some stocks you're looking at. I want to know the names that you guys are looking at, so we can start to get the idea flowing again. Again, this show is the best resource for trade ideas. That's the whole point. We've got ideas coming from myself, from Jason, and way more ideas coming from all of you out there. So guys, throw in the stocks that you're watching today. And while we're waiting for those to come in, I'm going to do a little click over to the live portfolio. This is my brokerage account that I have pulled up here. And I mean, we have got some freaking green, especially on these calls that we've made recently. First one that I want to call out, TAN. We talked about this stock on Tuesday and on Wednesday. I bought it Tuesday. Again, the thinking behind it was, if Biden wins, which again, I trust betting markets. Betting markets were saying that he was going to win. It should be good for solar, but the solar ETF TAN was down, so that was my buying opportunity. Down again yesterday. I again thought that was a buying opportunity, and look at the pop that we have today. The solar stocks ETF TAN, Tango Alpha November, up 11%. The next one that we bought last week, Palantir Technologies, PLTR, up 10%. Another huge winner. The news on Palantir is that they are in talks with the British government for some sort of big defense contract. Let me pull out some other show favorites. We talked about Voyager Digital. That's my crypto play. It's not owning crypto, but rather it is a crypto brokerage platform. We actually had their CEO on about a week ago, but we have that one up 4% now. Keep scrolling down. Box, that was another stock that we added last week on multiple extension. We've got Box up 3%. And then a favorite that we get asked about, it seems like 5 or 6 times a week, because everybody knows that we're in Detroit and we are believers in Rocket Companies, ticker RKT. We've got that one up 2% as well. So, I mean, the market's moving, right? We see the triple Qs here. We see the small caps with IWM, small caps up 2.6% today. But I mean, we have some winners. And I'm happy that I've got 2 recent additions to the portfolio that are up more than 10% today. I think you can always be happy with that. But I don't have the biggest winner of the day. Jason is actually the one. He does have the best winner. He called it yesterday with conviction. So whenever Jason's ready to pop on, we'll hear about what stock that was and what the story was. But I woke up today. I thought I had this one in the bag. I'm gonna have the hot stocks of the day. But he actually had another one. So we've gotten a ton of tickers flowing through in the chat. So let's go ahead and scroll over to some of these tickers. All right, again, let's get the trade ideas flowing. One Life, One Chance in the chat said he sold his JMIA. I think that's one that he had been in for a while. Jumaya. That's one when we do our exclusive look into what people are reading on Benzinga.com. That's one of those tickers that we've seen pop up for a couple days with a lot of reader interest. We'll be getting to the what people are reading on Benzinga.com in a little bit here. We got somebody selling their last bit of PayPal. I haven't looked at a PayPal chart in a little while. Let's pull up that one. So here's the 1 year on PayPal. Yeah, that thing's got to move. Let's see. It's up after it looks like the stock got upgraded from a hold to a buy with a $210 price target. So we've got PayPal being sold on a pop there today. ELY, that's another one somebody's looking at. That's Callaway Golf. Let's see. Okay, that's one that's moving. Callaway Golf. If we want to talk trade ideas, that's one that we had a Benzinga reporter Chris Catchy on the show earlier in the week. He was basically giving the long thesis on Callaway Golf. His premise of it was Top Golf, which is like a golf outing and entertainment company, was planning on doing an IPO at a $4 billion valuation. They changed their IPO plans. Instead, Callaway bought a controlling stake of the company for $2 billion, or at a $2 billion valuation. So they basically got half off of the IPO price. So Chris basically made the case that there should be room to run for Callaway. I'm not in this one personally. He is, and it looks like we've got a couple of chatters that are in this one. All right, and now we are coming up on all the cannabis stocks. Let's do a quick run through those. I haven't looked at cannabis yet. We'll start with Curaleaf. That is the one that I own. Curaleaf is up another 2% today. So this one has had a nice move this week. ACB is the other one that's being dropped into the chat. Wow. ACB. So this is the 1 year on it. It doesn't look great. But on the day, we got Aurora Cannabis Alpha Charlie Bravo up 28%. Let's see what the news is here. Scrolling down on my trusty Benzinga Pro. All right, I don't see anything specific on Aurora other than just general strength in cannabis. If any of you guys know what's going on with Aurora, what's driving this 28% move higher, drop it in the chat so that way we can all be educated on that. I'm going to drop the ticker over to our news desk so that way they can get to work doing some digging for us as well. But yeah, Aurora, absolutely killer day on that one today. So if you're in Aurora, you get my first round of applause of the day. There you go. And it looks like we've got a special guest here, Mr. Jason Raznick.
Yes, I'm here, and I want to see how happy you guys are right now. Give us smash that thumbs up, smash the like button, share this socially. I've been preaching to you on Upwork for the last, I don't know, 3 weeks, since 15, 14, and then I was live yesterday at 20, and I said it's one of my big positions. I had call options, and I had the stock. This is one of the ones I had extreme conviction for. It's not always when you're like, I look at probabilities and likelihood of outcome. And there's certain positions that I have significant probability or significant conviction for.
Hey, Jason, your audio is real choppy.
It is? Okay. How about now?
Keep going.
Is it good? Are we good?
It sounds pretty good.
Do I need a...
Nope, sorry.
It's bad?
It's bad, yeah.
Oh, maybe because of this headset thing. All right, 1 second. Hold on, guys. Sorry.
But despite your audio issues, we do have somebody in the chat saying Jason for 2024. So you've got at least one vote, 2 if your wife will vote for you as well. So we okay, 2 out of 300 million. So but the stock he's going to talk about, actually, I'm not going to spoil the stock that the stock that he is going to talk about. We'll let him do it. I think he's been waiting for this one all morning. Again, I'm still happy about my tan. That was the one that I bought on weakness in the solar stocks. Palantir, that was another one that I bought basically on upcoming contracts. And we got one today. So those are my movers. But let's go ahead and click over to our what the readers want segment. We've done this one a couple times, and yesterday I asked the chat. I said, hey, is this segment useful for you guys? Basically what we're doing is we're giving everybody out there watching some exclusive data, right? The market is all about finding information anomalies, figuring out how can we be smarter than everybody else that we're out there competing against. And one of our answers to that question was to give you guys a look at the most read stories on benzinga.com. And the reason that we're doing that is because you can get a sense only if you watch the show as to here are what the hot stocks of the day are. Here's what people care about, and that sort of thing. So let's click over to it. All right, we number one on the list. What the readers want. What are people caring about today on benzinga.com? Again, this is from the 6 million people that we get to our website every single month. Number one on the list, Alibaba, story about unusual options activities. Number two, we have a fan favorite, Tesla. Tesla getting an order for 150 semi trucks. Number three, it's sort of a mixed bag, no clear signal there, but in the story, it looks like we got General Electric, Merck, Roku, Canopy, and Upwork. Story number four, we've got Jeff Bezos selling part of his Amazon stake. And story number five, we've got Kathy Wood selling some Tesla to buy dips in Alibaba and PayPal. So if I had to pull some signal out of here, again, so some exclusive data that we get that can help us become more informed in the markets, it's that Alibaba is hot today. And we saw Alibaba on the board yesterday too. I mean, this isn't noise. This is a sustained signal. We've got story number one today, Alibaba unusual options activity. We've got story number five today, Alibaba with Kathy Wood. And so Alibaba, we've got some energy going into that. Let's see, the Tesla. I mean, two Teslas in there. I mean that makes sense too. So Alibaba, that's the sort of the interpretation of the day as it is that is the interesting stock to watch. All right, and just taking a click over to the chat for a second. Question: Asana, the next Upwork? Maybe. I mean, I'm a user of Asana, right? We pay at Benzinga a pretty big Asana bill every month, and we've had multiple periods of time. Like we've been an Asana customer since I believe 2015 is when we first started buying it as a service for our business. And sorry, if you don't know what Asana is, it's a project management tool, right? So that way we can have, let's say we've got 100 people here at Benzinga. We can keep track of projects. We can assign work out. We can build things together and that sort of thing. And so we've been a customer since about 2015, so we were pretty early as a user of Asana, and we've had multiple times throughout the years where we wanted to stop being a customer of Asana. We just weren't using it. We weren't utilizing the tool correctly. We found other tools that we thought could be more helpful, but we never stopped paying that bill, and it's a decent bill. It's in the thousands per month. And the reason why we could never stop being a customer of Asana is because it has all of our data locked in there, right? Like when we have projects, right, like development of a new section of the website or something along those lines that go on for 4 or 5 months and have 15 stakeholders involved and people working and collaborating and sharing documents, assigning tasks to each other, tracking progress and that sort of thing. It's really tough for us to get off of it. Because all of that history is there. Like we would come to say, hey, we think Monday.com is going to be a better tool for us than Asana, but it's like, okay, Asana's got 8 years of history and conversations and files and that sort of thing stored there for us. The team already knows how to use it. And so that's why we've been a customer of Asana for a long time. I don't know how valuation looks on this stock, but it is a good tool. It's a tool that's hard to get out of. It's one of those, things behind the things type softwares. I think it's very Salesforce, HubSpot-esque in that sense. So generally speaking, I like Asana. I don't know what the valuation is, but I have a general positive outlook on it. And Jason, you're back?
Yes. How is my mic now?
Wow, you sound like Howard Stern.
Do I
It's
look like
so
Howard?
clear.
Do I look
You
like
have a nice
Howard Stern?
deep voice now.
Do I look
Sort
like
of,
Howard?
a little bit.
All right. Maybe my headset has run its course.
Well, do you want to look like Howard Stern? I think that's a better question.
That's a good question.
The answer is no, correct? Just
Yeah.
make sure.
But
Okay,
maybe,
good.
Yeah, no, and Howard would say that wouldn't be a good thing. But he does do good interviews. He does pretty good interviews. So
No, for sure.
yeah. So if you're listening, hit the like button. But I have to go back to the stock that I've been preaching about for months. If you remember on the pre-market show, I mentioned Upwork, and I said, I got a text during the show. This Lexi person wrote me, "Hey, my Lexi works in whatever," and she said, "I'm down on this Upwork. It was at $15, and I gave it to her, and it went down to $14.60." And I'm like, "Yes, you should buy more." And so there's certain times when I believe that I can find better information than others. And I had an opportunity with Upwork. They changed the way they were accepting payment with vendors. So vendors that are on the platform weren't allowed to go off the platform. And if they did, they can get kicked out. And vendors take it seriously because if it's their livelihood. And I look at Upwork the same way I would look at it at a Match.com, at an Uber, or any kind of platform business, network type business. And so when I learned that Upwork was doing that, when Upwork was doing this, I knew there was an informational edge because I know the analysts on Wall Street are not paying attention to that. You go talk to the analysts that cover Upwork, ask them how many have an account on it. Ask them how many have spent over $100,000 on it. Like, these are things I've done. And so I went big on it. And there was times when it wasn't the right move. The stock went down. But in the last week or two, people kept saying, what is my, one pick? And I said Upwork. Yesterday, I said, during the show, you can go back to yesterday's show. I said, earnings are tonight. Earnings are tonight. I bought a bunch of calls and a bunch of stock. And a lot of times I buy these positions too small. This one I went a lot bigger on. Now, today, I wish I, mortgaged the house. My wife didn't think that was a good idea. So now I don't know what to do with my wife, because if we did mortgage the house and I put in a lot more, then, it would be even a better situation. But seriously, it is one of these things when I look at probabilities of success, likelihood of success. So I bought a stock yesterday in the show that someone gave. I wrote his name down because if it goes down, I'll be upset. But I bought a stock that someone gave in the show yesterday. I didn't have much conviction on it. I just bought it. It's a REIT. It's a dividend. It's a monthly dividend. It's a 10% yielder. I bought it because I don't know. It was a show. It was a show idea to show the show can bring ideas out. But Upwork, I had extreme conviction on. So I went hardcore. And I know we have a guest coming on in a second, Matt Maley, who is awesome. But Upwork was that. I still own it. I sold a couple of my calls today, but I'm long 80% of the position. Asana, Luke already talked about the Upwork thing. It's good job. Shaka Guru, about 2 calls before the close. Good job, man. So on the Asana question, we can go more on that. But again, when there's an informational advantage or something, it's like why buying propane or why you're buying certain stocks or VSTO, the gun manufacturer. I bought that because of the election. I bought that a while ago. And Generac, same thing. But before, I think Luke, do you want to bring on the guest right now?
Well, let's bring him on.
Okay, because he's sitting there. Do you want? Yep, you got it. Okay.
Cool. All right, Matt, can you hear us?
I sure can. Luke, how you doing?
Doing well. Well, I'm doing medium, I would say.
Medium.
So I bought 2 stocks in the past week. I bought Palantir and I bought TAN, which is the solar ETF. Right. They're both up more than 10% today. So I thought I was going to be the big winner of the day. But Jason bought Upwork and it's up 40%. So, I'm still the loser of the day, unfortunately. It's
Well,
less about
thanks,
making money, more about being right. Oh wait,
Well,
no,
exactly.
I got that backwards.
It's like the old saying too. Is like, nobody ever lost money taking profits, and some people say, "Oh, geez, I made 40%, but then it went up 60%." It's like, yeah, you can't get too upset with that. You're up 10%, the other guy's up 40. Hey, it's better than a sharp stick in the eye, and it's a hell of a lot better than a loss. So it's all good.
There you go. But Luke, get used to it. Yeah. I'm gonna find my next person, but I mean, Upwork. It was one of these no-brainers for me, and people who listen to me, they made money. But all right, you guys take over.
Cool. All right, man. I know I didn't give you a ton of preview as to what we've been doing, but basically, Jason and I we've been hosting a show each day for the past 2 weeks or so. And what we want this to be is we want this to be the trade idea resource, right? And we want to bring people on who, like yourself who are really smart, who can give us some sense as to how you're reading these markets. I mean, like, we're up like crazy. If there's any individual names that you like right now, we'd love to get that. And even before hopping into those, maybe even just doing a quick 30 seconds on your background for the listeners out there would be helpful.
Sure. Well, my background is interesting, right? I'm the chief market strategist at Miller Tabak, and a relatively small firm, a medium-sized firm. But I spent my first 25 years on a trading desk, 2 trading desks. One was Salomon Brothers for 15 years, and those were a little bit younger, may have never heard of Salomon Brothers, but it was the most powerful, certainly one or two most powerful trading desks in the 1980s and 1990s. Both basically every business. I was on the equity desk in the stock desk, covering some of the biggest accounts in the world, whether it be hedge funds, mutual funds, and other type of money managers. And for me, that was great because it really gave me an idea. Then I moved on to Merrill Lynch. Spent 10 years there, so 25 years on trading desks. And you get a lot of these strategists, and they're all talking about the theoretical. This should happen, that shouldn't happen. That's all great. It was one of my favorite sayings is that one of the worst sayings on Wall Street is one of my best sayings. It's like, people say the market's always right. Well, something that's ridiculous. The market is only always right eventually. And that's where we get the big opportunities. So when the market's wrong, I mean, was the market right at the top in 1999? Was it right at the top in 2007? Was it bottom is it right at the bottom this past March? I mean, they're wrong all the time. And that's where we try to get, that's where we can make the most amount of money. There's nothing wrong with buying some good solid companies that pay a good dividend and holding them for a long time. But I like to have 2 different time frames. One where you're having that long term, a bunch of money that's stuck into that long term 5, 10, or even longer term trajectory where that's what your vision is for the put away for a long time. But then you can really maximize your profits by doing these trades, whether they be short term trades for a couple of days or even day trades. A couple of weeks, couple of months, etc. And the greatest thing is, in some of these areas, is that when you have an opportunity that you think is a short-term trade. I mean, one of the short-term trades I made 2 years ago about this time was going along the housing stocks. I said, for a number of different reasons, I loved them, pounding the table. People are saying you're crazy. The Fed's going through a tightening cycle. It was in December of that year, not November, but still. And I said, no, these stocks are going higher. Well, I rode it for 2 years. It was something I thought would last a couple of weeks.
Okay, so basically you were in these stocks until like the summer craziness, right?
Exactly, and then I just saw a change in the interest rate environment. Saw the stock starting to roll over a little bit, and I wasn't calling for amazingly higher interest rates, but that's all it took. And again, I didn't take everything off the table, but I said people should be cutting their exposure in a significant way, and it worked out very well. I mean, we'll see what happens next. I'm not sure that interest rates are going to come tumbling down again. So I think this group's still a bit dicey, but.
Okay, so you still like the housing stocks?
I do. We just have to be a little careful. This whole thing with the interest rate, the last couple of days, when people say, "Oh my God, Biden's won interest, but it's not going to be a blue wave. Or it doesn't look like it's going to be. Therefore, interest rates are not going to spike higher." I'm not convinced that's the case. I think that there's a decent chance rates will go higher, but that should provide a great opportunity to some of the bank stocks, which are poised. Some of which are poised to break out right here.
Okay, what are some of the bank stocks you like?
Well, the first one to mention in Jason's area is Wells Fargo, and the reason why I mentioned that is simply because it's been a horribly underperforming stock. I mentioned it on my Benzinga stock picks call I had earlier in the week. I'm sorry, on Monday, or was it Friday? I'm sorry, but anyway, the huge buyer of the November 24.5 calls. It was a straight directional play. Guy bought 33,000 contracts. Spent over $500,000. And one of the things, you hear.
Wait, sorry. Let's slow down for a second. Okay, so you bought you bought a ton of calls in.
No,
in
I
Wells
didn't.
Fargo.
I didn't.
Okay, somebody bought a ton of calls in Wells Fargo.
Somebody bought a ton of calls out there.
And what was the trade? What expiration and what strike was that?
November 20th. November 20th. $24.5 calls. Okay. And I immediately said, what's going on there? The fundamentals in this company stink. The management keeps screwing things up. Even their new management keeps going on. Somebody just spent $500,000 on something that's 10% out of the money, okay, that expires in 3 weeks. They either know something or think they know something. Whether they're making a bet on interest rates, that's a lot. Well, we all know about the put-call ratio and saying, geez, when it gets too extreme, it's either a buy or sell signal because it's a contrary indicator. That's fine. But when you see a big play in the options market, especially if it's way out of the money with a short horizon, people don't do that unless they think they know something, and in most cases they do. It's just my experience over 30 years in the business that tells me what's going on. Because if that stock doesn't go up 10%, their $500,000 goes to zero. Okay, even if you run a great big hedge fund, you don't want $500,000 going to zero in a few days. Okay, now. So that's part of the reason it raised my head. But I've also been thinking interest rates could move higher. Okay. And even though we saw this drop here, if we get above 0.9% on the 10-year and we continue to see the yield curve, it flattened out this week, middle of this week, it goes back out. These stocks are going to explode to the upside. The same thing with JP Morgan, which is bouncing up against a tough resistance level at 106. It's getting close to that level. Everybody's saying, this is horrible. Interest rates are going to come back down. We're not getting the blue wave. We're going to go back down to 0.5%. One day does not make a trend. The trend has been moving higher. If we break above 106 in JP Morgan, that thing is going to fly to the upside. And what better way? And again, you have to look at big picture things too. It's the end of the year. Here's a group. I haven't mentioned one thing about the fundamentals in the bank stocks. Why? Because they've been cheap for 3 years and they haven't done anything. Right? I don't care about the fundamentals in this situation. I do in other situations. But when you've got a group that's incredibly underowned now, it had been cheap and overowned for a long time and couldn't get out of its own way. Now it's finally underowned. This thing breaks out, and then you've got institutional investors that are saying, oh my gosh, I'm behind my bogey. How can I play catch up? I'm going to play catch up in the stocks that have been lagging all year. This one happens to be 3 years. They're going to jump into the bank stocks like you wouldn't believe. We're not quite there yet. Wells Fargo, I like it a little bit better because somebody who's probably a lot smarter than I am is making a big bet. JP Morgan, I'm going to wait until it breaks above that resistance level. And when it does, people have no choice to buy that to go into the end of the year. And of course, even those investors, those institutional investors who are ahead of the market, okay, they want to stay ahead of the market. They want to get a bigger bonus. The other guys are trying to save their jobs. Either way, one thing, I'm kind of bouncing around. I'm sorry, I'm kind of rambling here. But the one thing you need to know about institutional investors, they all talk about being very short, very long. Many of them talk about being long-term oriented. And that is true. Many of them are, especially in the mutual fund area. But all of them, 100% of them become short-term oriented in the last 2 months of the year because they care about their bonus. They care about job security. They have got, even if they're way ahead of the market, they need to stay ahead of the market. They're not just going to sit there. And so they're going to buy what's hot. They're not going to, they don't care about what happened. If they think the market's going to zero on January 15th, they'll still be buying like crazy if the market's going higher at the end of the year. They all become momentum buyers at the end of the year. And that's when we can really make some outsized gains, especially on the long side, but outsized gains when you can just kind of ride their wave as they keep buying into the end of the year.
Okay.
All right. Go ahead, Jason.
Matt, so taking a step back, what's your process like when you do research on a company? Do you find like the home building you were talking about? Is it you see like something is happening in the economy and you're like, I want to go find the examples of companies that would be good to invest in, or is it like, how do you come across what you decide to research? Is it the bank decides and that's how you go about it? Just curious, like what a day in the life or how you come about your ideas.
Well, one of the things that's great about working at a small firm like Miller Tabak is that they let me kind of do what works for me. I've been successful at it. I made a lot of great calls, especially at key turning points. And one of the things I try to do is, and that's really when you make the most money. I mean, a lot of technicians, they use a lot of technical analysis, but they're looking for the 70% in the middle. That's good, and I use that a lot. But we still want to get those key turning points when everybody's on one side of the boat. And so I'm constantly looking for those. In the case of the housing stocks, we had a situation where they've been getting killed all year because the Fed, and this is 2018, when the Fed was involved in their rate hikes, their tightening cycle. But then all of a sudden, they started outperforming as we moved to the fourth quarter, and the whole market started to go down with it. Suddenly we got in November and they started outperforming. I was like, well, that's kind of weird. Now they did get another leg lower when the rest of the market got crushed in December, but they still outperformed even on the way down. Yep. More importantly, though, I was looking at correlations. One of the best correlations, leading indicators for housing stocks is lumber. The price of lumber, instead of going down with everything else at that point, was going up quite considerably. So I had two divergences. We had the group acting better than the broad market, and we had its underlying commodity acting very well. So I started pounding the table, and again, everybody was on the other side of the boat, saying interest rates are going to continue to go higher, and then we, when especially at the very end of the year, and the Fed realized that they couldn't keep doing this, and I saw a breakdown in the high yield market, and again, I'm starting to get off too many tangents, but the Fed cares right now in recent years much more about the credit markets than they do the stock market. The Fed is they say they're data dependent, they're really market dependent, but right now they're credit market dependent. They did their pivot when the high yield market started getting hit. They did their huge pivot in March when the credit market started freezing up. That's when they really came in. So when I saw that too, and I said, oh my gosh, they're going to flip, rates are going to come back down again. These housing stocks are going to take off. And then again, looked at technical analysis and saw some breakouts to confirm it. But catching it at the bottom was looking at those divergences.
Got it. Okay. So it's basically you're always paying attention to what's going on. You're always paying attention and trying to find opportunities and when other people aren't seeing them yet. Is that a way to sum it up?
Absolutely. And you were saying earlier, Jason, is that when people are you want to be, some people try to be contrarian just to be contrarian. There's no sense behind it. It's like,
there are so many people who do that. I love that point. That I've never heard anybody say it like that. That's so true. Yeah, don't be contrarian just to be a contrarian.
No, I mean the trend is your friend is a good adage on Wall Street. Yes. In the middle of a thing, the problem is avoiding the extremes and don't just look at something as cheap or expensive. As we all know, they can stay incredibly expensive for a long time, as we saw with the tech stocks in 1999 and 2000, and the bank stocks have been incredibly cheap for 3 years and they haven't been able to get moving. But so we do want to pay attention to that. But when does the positioning come? We saw that this year when people started buying all those calls on the mega cap names, they get too much. They finally started to dump them. What's sentiment doing? And we look at not just I look at the II poll and the AAII poll, the individual investor poll. Also look at the futures traders poll, the DSI. We see what the futures traders are doing. Those put call ratios. When they get to one extreme, they have nowhere to go. That's one of the reasons why I'm concerned about the bond market. Sorry, take it back. And we can talk about the gold if you want to. But one of the reasons I'm concerned that gold really is going to have a tough time rallying is that I think the dollar is going to have a very, very difficult time selling off near term, again, over the next 2 months, because the positioning, everybody's short the dollar. Short the dollar, and everybody's long the euro, looking at the commitment of traders data, the COT data. So the dollar can't fall a huge amount more, even though fundamentally maybe it should, and maybe it should under a President Biden, assuming that he wins. But at some point, once those positions are worked off, then the fundamentals will come into play. Then the dollar will fall like it should on a fundamental basis. That will allow for gold to see another leg higher in what I think is a long-term bull market in gold.
All right.
Got it. Okay.
You're giving us some picks today. I like that. I like the bank names. So like just to recap for everybody in case you missed it. Matt likes banks, Wells Fargo, JP Morgan specifically.
Right.
And those are the picks of the day.
And I will say this, the KBE Bank ETF, $35. Once it breaks above that level, that's going to be a one. Again, when you technical analysis, it's vitally important to talk about, and I'm just looking at the KBE right now.
Yeah, I've got it up on my screen too.
Yeah, it's at that 35 level. If it breaks above that level, that's key resistance. You need to wait for it. People sometimes try to anticipate a broken support or resistance level, and they get creamed. So I don't want to get too aggressive Wells Fargo right yet, but if we get any more upside follow through in the next few days, that's the groups that you want to really look. That's a group you really want to look at.
Hit the bank.
And
I like it. All right.
And also look at Advanced Micro on the tech side if you want to take another name with you.
You still love that one of AMD?
Well, one of the things about, again, it's had this huge rally in the last couple of days, but it's weird because when I talked about, it got down to, it was made a head and shoulders pattern, okay? And it was testing that late last week, it was testing the neckline of that. And the one thing about head and shoulders patterns is that they're twofold. They're one of the best ones. They break that neckline, you got big trouble, okay? However, one of the most bullish things in technical analysis is a failed head and shoulders pattern. In other words, when it bounces off that head and shoulders pattern, which it did this week. Now it's already rallied 10%, so a lot of that juice is already in this name. But what I was saying about the stock in my my little call there for the Benzinga stock picks is that we had a level that earlier this week, again, it's had this huge rally, but it was at 74.75. That was the neckline. So when the stock was trading at just above 75, I said, this is a great call right now because we know what our limit is. If it gets below 74.75, you are out of that trade. Get out of the stock. It's going a lot. In fact, you might even want to get short. It's going lower. However, it looks like it's going to be a failed head and shoulders. It looks like it's going to rally higher. And if it gets above that right shoulder, which is the October highs, and that's right in the, it's about 87.5. Then it's really going to take off. This has been a great performer for most of the year. Then it kind of flattened out the last 2 months. So it was one of those things that was at a key level, a key technical level, a key juncture. And that was one of those things where I had to wait a couple of days because I didn't know which way it was going to break. As soon as I saw that it was going to bounce off that key support level, I said, buy the stock. Now I'm a little less because it's had a nice run over the couple of days, but it's still a play.
All right, well, Matt, we're gonna have to think of some award or prize to give you because you're the first guest to come on and rapid fire us 3 picks.
Yeah, wait,
I like that.
Wait, did you already ask him, or Matt? Maybe you can't talk about it. Bitcoin. Any opinion on Bitcoin?
Yeah, it's funny. When it broke 12, when it broke 12,000, I turned more bullish. I mean, I'm bullish. Like it's funny because this is Bitcoin. I hated it when it was 3 years ago or 2 years when it was at 18,000. I said, this is crazy. It doesn't make any sense to me. Got to short it. Worked out really well. Got below 5,000. I said, buy it. But again, it was all in technicals. I've completely changed my stance on a long-term basis. I think this is a great buy. However, it is now, especially with today's move, it's just getting awfully overbought. So I just think, there's going to be plenty of volatility left in this thing. I just wouldn't be chasing it up here on a near-term basis. But it's going to be, I think that the odds that you'll get it below 10,000 again are very, very low. So don't be waiting for it to fall a huge amount. Buy on weakness. There are people, smart people, who think it's going to 500,000. I don't disagree with that.
And
so you're really bullish long term on Bitcoin. And Jason, all right, what were you saying?
Well, I was gonna say, where could people find you if they want to follow you more or hear what your picks? Are you on social?
I've got a link.
All right, Luke has it. Luke took care of it.
Oh Jesus!
Oh,
there it is.
Heat maps.
All right, I've got the right link now. And the link that I'm dropping is for a newsletter that Matt has been doing with us for maybe 2 months now. It's pretty cool, and he does. He's doing basically a pick a week, and it's only $97 a year. with a 2-week, guarantee period. So if you don't like it, you don't like his analysis, you don't like his picks, but you just got a pretty darn good preview of them now. You don't have risk associated with that.
Right.
In the first 2 months, I think we're already over 500 subscribers, so it's been a huge hit. So check out that link in the chat.
Yeah, and I also do a thing. We go to a third level where I'm starting to do a little phone call 3 times a week for about 20 minutes to a half hour, talking about these names and these picks.
Yeah. Okay. I didn't even say that. Yes. So if you want more of the one-on-one and this type of interaction, yeah, he does do those big group calls, and they're really neat to listen in on. So.
Yeah, and let Matt do the work for you. I mean, we're not going to always be able to find stocks. It's just like on my Upwork. You could have let me do the work for you on that one. Let other people do the work for you. That's how I find most of my ideas. You can't find everything. And Matt, you can hear his passion. You can hear how much he knows about these stocks. Let him do the work.
Yeah, Jason, he might have more energy than us. And we get told we're too energetic.
That might be hard, but I'll tell you one thing though, and it's just knowing Jason's work and talking to him with today is just my calls. I mean, I'm not as much because I'm not a options person with the options background, but I do talk about options, obviously like looking at Wells Fargo and things like that. But your work is fabulous, and that's really how you make your the big swing. When you want to make those, you can. I guess my point is you can hit the home run or even the grand slam with the same swing. You don't have to swing for the fences in the options market, and so I think there's a lot of different voices out there that are very helpful. And Jason, you're obviously one of them.
I mean, I bought those calls at $1.43 and an Upwork, and now they're like $9.70. I mean, it's crazy. And yesterday they were at like $2 or $3. You could have bought more for $3. Now they're at $9.70. And I bought January calls, so I'm keeping like 80% of them for now. And see, when Fiverr had earnings, it sold off the next day. So I wanted to take a little bit off, but so the
Upwork trade for you right now is take some profits, leave some money on the table.
Yes, leaving a lot of money, and we're all gonna have bad calls too. But like, there's one Matt that I own this stock. I like investing in the thing behind the things that power other things. It's a terminology we use on the show a lot, and I'll put it on the screen right now. And there's another one called GAN, GAN. It powers a lot of the online gambling, sports betting, all that kind of stuff. And the stock is down 6% since 4% since I bought it. So that's one of like an Upwork type play, but it's not performing the way I'd like it.
Well, it's like nobody. That's one thing that they're using the baseball analogy. You can't you can't bat 1,000. You want to bat way. I mean, if you're a great baseball player in the major leagues, if you bat 350, you're huge. You want to bat way better than 350, but you ain't gonna bat 1,000. And when you do have a loser, get out of it. Get out of it.
Matt, maybe you're good luck, but because GAN just took off a little before I said it, and now I'm only down 1.9%. I'm not ready to give up on this one yet. No. So this one, it's hanging in there. So all right,
you go from $2 to $9, and I mean, I'm not a math major, but that's damn good.
Yeah,
yeah.
So the Upworks, I spent $2.20 on the calls, and they're at 9:30, and it went down. And I mean, I have screenshots. People texting me, "Why is your Upwork selling off?" If you do a chart, and it just if you keep the conviction and your thesis hasn't played out yet. I was prepared for earnings not to be good last night, to be just okay. I was prepared. That's why I have January's, but they were. So it's like, if you're not, my worst trade, Matt, back in the day, I was short Washington Mutual in a big way. It was at $39. I shorted 200 shares. I was 23 years old. So 200 times 39, it was $7,800 I was short. This guy Killinger was a CEO. And I waited 2 quarters to do the short, because I'm like, it's not gonna be bad yet. So he gets on the conference call and he's like, "Oh, we just took a write down of $1 billion, but no big deal." The stock the next day opens up at $47, so it went up $8. So $8 times my 200 shares when I'm 23 is $1,600. I'm like, holy shit, I'm screwed. This is the worst trade. And so that day, then I went and covered that short because unlimited risk.
Right.
And then Washington Mutual, goes from 47 to maybe 48.5, and then from 48.5 down to 0. I was, and it was one of those examples where my conviction, I was so confident on this one. I knew about the option arm industry, and I knew that they were the leaders in it. And there was no way these houses were gonna, be able to pay back people that had these houses. I mean, I remember talking to someone, she got an option arm to start a web design franchise business. She needed to pay $100,000 to start a web design franchise business, when anyone can start a web design franchise business. So, or anyone can start a web, so it was just like that kind of stuff. And I didn't keep my conviction. So my biggest lesson here is like, when you have that knowledge base, or you have that unfair advantage in the sense that it's your expertise, and the things line up, like on Upwork, there were so many things that made it like a no-brainer pick. And I don't want to say any pick's no-brainer, because you don't know, the CEO gets hurt or whatever, but that's what I've learned. And again,
and I was gonna say, and I think another lesson out of that too is to use options in some of these short convictions, right? If you have a short thesis on something and it might take a while to play out,
you mean short like going negative, you're saying, or short time?
Yeah, short, like you're betting the stock to go down.
Okay.
You had to get out of it because you had that unlimited risk, because you're just a naked short position on the stock. If you have puts, you own puts, you know exactly how much money you can lose. You can't lose any more than what you spent on them. And maybe that would have let you hang into the trade.
Yeah, and then I would have made it. I would have on Washington Mutual. I would have, because it went bankrupt. I mean, so when I short, I should buy puts too. That's or just buy puts. That's a good idea.
Okay.
Well, I'd say the one thing I will say, when you have conviction on something, and it's up or down. I mean, if you're short, again, options are a little bit different, because you can get a lot of exposure with less money, and as Luke, as you said, what your total risk is. But if you have conviction on something and it's going your way, not going against you, I'm saying it's going your way, don't be afraid to add. People sit there and they go, oh my gosh, I bought a stock at $10. It's going at, I wish I had bought more. I wish I had bought more. Now it's at 15. It's up 50%. Gosh, I wish I had bought more. Well, that's fine. Where do you think it's going? I think it's going to 50. Well, you think it's going to 50? Why would you wait? Buy more now. Okay, you missed it. That's okay. You got a lot in. So guess what? You doubled your size. Great. I bought some at 10. I bought some at 15. Now my average price is 12.5. Okay. But it's trading at 15. You have a profit. Now you can say, well, geez, if I'm wrong, I'll put a stop level 12.5. And so my risk is zero. I mean, obviously the thing could open up one day and be bankrupt, and there's never zero risk. But the point is, you don't be afraid to chase things that you've already got a position in. And same thing if you're shorting something on the way down, you want to go back down. It's okay. Don't sit there and say, gosh, I wish I had bought more. Go ahead and buy more. I guess.
No,
hey guys, wait. I've got to be the bearer of bad news.
Why?
And I've got to say that I at least have to go. I got to call it 1, unfortunately. Jason, you've got the development meeting at 1.
Am I going 2 weeks in a row?
I don't know. Last week you said you would come for a couple weeks, but
all right, I got a development call. But
you set yourself up there. But all right, I gotta hop onto a sales call, guys.
Say, Matt, on that thing about, you said, go ahead, buy more. My issue is this. So I bought Tesla a long time ago, like at $38, and I didn't buy more of it until it was probably like 180 or 280, maybe even more, because I didn't want my portfolio to look like, I wanted to show the percentage gain. I loved seeing that huge gain, which means nothing, and I was an idiot, right?
Yeah, that's and then that's just, I understand why people, and I've done the same thing. And it's like, oh my gosh, but it's just a way, especially if you have a real big conviction on something. It's just, you can add to it. And like I said, when you have it's a lot easier to have a lot of conviction when it's like, if I buy more here, I know that I can still, raise my stop limit and still make a profit and guarantee no loss, et cetera.
You're right. I was talking to somebody, and like when I play blackjack, or I used to play at casinos, I play by daddy rules, which was basically when we made fun of my dad, but it was basically when you have 16, the dealer's 10, or
right
down. Okay, so I play by the rules. But in the stock market, I don't do that, I guess, because when I was buying Tesla at $38 many years ago, and I had this gain, I didn't want to buy more at 79 because I don't want my percentage gain to look less. So basically, when I show people my portfolio, they see, oh, Jason's up 400% or 300%, and I didn't buy more. I mean, I bought Apple way back when I was in college, like at $14. I never bought more shares. It's a great position. I never bought more shares. So I'm up a ton on it. But from a low basis, because when I was, way younger, less money, and I should be I should be retired. I should be personally. I should be retired on Apple and Tesla.
Yeah.
I mean, if I would listen to what you're saying, Matt. I mean, because what you're saying is, if you believe that you should have more, and you believe the stock's going to go up or go down, then buy more. Stop.
There's nothing wrong. There's just nothing wrong with that. And again, but you want to raise your stop levels and and adjust your risk. Your risk management accordingly. But it's a
yep.
But like we said before, the trend is your friend. The momentum gets going, boy. It can go a long way.
Yep, and that's exactly. So great advice. Thanks for coming on. Look for Matt Maley's newsletter. Google him. You can find it. I put it here. We appreciate you coming on. We appreciate all the stock picks. Maybe you can come on again soon. And have a good day. Stay safe.
Too. Good luck in these crazy markets. Great time. Yeah, it's fun though.
Yeah, exactly. A lot of volatility. Like it. Thanks.
Take care. Have a good one.
Yep. You too. So guys, that was Matt Maley. He has a newsletter. The link is above here. I'll repaste it, or I'll try to. Let's see if I can figure that out. I can't. So, yeah, I can. Okay, right there. So, and hopefully a lot of you have profited off these trades the past couple of days. I know RKT, we got a lot of winners in. We also got a lot of winners in. Obviously Upwork, probably one of the biggest calls that we've had in a long time, from 15 to 28. And yesterday live on the show, I said I was buying more call options, and look what it's doing today, up 45%. When you have your conviction, you go after it. My GAN, like I mentioned, it's gone against me, my GAN. So I haven't gone bigger because I knew the Upwork story more. I knew the Upwork story 10 times more than I know the GAN story. If I was a customer of GAN, I could give you guys a lot more color. I'm a customer of Upwork. So I knew it. I knew it as a user. I mean, that's why Asana, I know it as a user. I know what products. That's why Salesforce. That's why, that's why HubSpot. I gave HubSpot at $60. It was the biggest no-brainer buy ever for HubSpot. John Centron, I don't know why you're not getting our notifications. In YouTube, you should email YouTube. If you turn the notifications on, or you could sign up for our newsletter and it'll alert you whenever we go live. Just go to benzinga.com and sign up for a newsletter. It should alert you. Or if it's, I don't know, maybe we got to create one for you. But I know someone asked about Inseego, INSG. I know Inseego very well. It's like my Zoom call, but let's go. Okay, something's wrong with my chat here. This is interesting. I got to send this to the developer people. Okay, 1 second. I got to leave in a second, guys, because I got to go to this developer call. So I'm going to hang up in a second. Inseego's up 6%. That is a Matt Kolb favorite. So if you're at 5G, I don't think you're going to go wrong by being in Inseego. It's not going to cut 50% in half. Like, again, I bet on probabilities. When I hit that, when I hit the gold mine on Upwork, yes, hit the bell. I mean, that we should get a bottle of Dom today, because that one is, we hit the jackpot on that one. Inseego is one that I think the downside's low, upside a lot higher is 5G is gonna play out over time, especially now that Apple has 5G on the phone. But that's all we got. That's all we got today. I don't know, John, why you're not getting them for us. Maybe it's something that we're doing on our end. Feel free to email us at email us at support@benzinga.com and we can look into that. But Palantir, I've looked into Palantir. It's not one I play because I don't get it. It's out of my circle of competence. That's maybe Luke or something. But I got to go to our call now for work because I'm late to it. I don't think you guys want to hear me talk about the development behind Benzinga. Do you guys really want to hear that? I don't think you guys do. But we have a call with the developers to go over some stuff, the stuff behind Benzinga. So I'm going to go do that. You guys go make money and trade and be successful and be conservative. All right. Have a great day. And there's always a bull market somewhere, as Jim Cramer likes to say. All right. We'll talk to you later. One life, one chance, one opportunity. Go get it. Peace.